I've been dropping some fire on you guys for the past 3 videos, all right? What's the best time frame for pivot points? How to counter trend trade as safe as possible using pivot points. And most of all, my pivot point strategy that I dropped on you. Fire. All of them fire. All of them is great value, and it's gonna help you. It's absolutely gonna help you, okay? So while you guys are still studying that and eating that up and trying to master those videos, I say, you know what? Let me answer some of the questions that have been coming from those videos in the J Wayne Q&A session. You know how I do it. So without further ado, stay tuned and let's get it.
You got questions? J Wayne got answers. It's the J Wayne Q&A show.
Hey, J Wayne, trader get paid. J Wayne, he got the answers. Q&A. J Wayne, J Wayne Q&A.
Hey, what's up, y'all? This your boy J Wayne. You know, representing Team Take Profits, and just sipping my little energy drink. A little tired this morning, but I will not let that stop the grind. Hey, we gotta work some way, you know what I mean? Either you're gonna work in a factory, work in, a restaurant, or you're gonna grind and do your own business, but you can't get away from working, you feel me? So we're gonna start this off with Crystal Crawford. She said, just curious, why the 50 and not the 20 for a shorter time frame? All right, so that's a good question, Crystal. Shout out to you. Thank you for being a supporter and subscribing, okay? Shout out to you. But see, the 20 simple moving average has its purpose, okay? And I'm going to show you and take you to the charts. But the 20 simple moving average has its purpose, and the 50 as well. Now, what are they? I would look at the 20 simple moving average as a means of entry. Now, regardless, the 50, or not the 50, but moving averages, if you use them as a means of entry, you're going to enter late. That's just the way it is. But I used them when I first started, and they were like training wheels. You couldn't get me to enter into the market without a simple moving average or exponential moving average of some sort. So it just made me feel comfortable. So do what you need to do, but we need to learn how to enter without the moving averages at some point. But the 20 I would use as a means of entry because it's only calculating 20 candles. That's what the numbers are doing. With moving averages, they calculate the numbers of candles. So eight exponential moving average or 8 simple moving average, that's calculating 8 candles. That's good for entries. So you can use like an 8 and a 20 crossover, an 8 and a 15, something like that. The 50 though, the 50 moving average is calculating 50 candles back. So for day traders, I think you're starting to see it. For day traders and scalpers, that gives us a good idea of if we're in a buyer's market, if we're on top of the 50, and a seller's market if we're underneath the 50. Hey, don't laugh at me if I'm using my little Forex hands. You know, every educator do the little hand gesture. It's so corny to me, but it's like that's what Forex is. It's all about higher highs and higher lows, and so the hand movements it just comes natural. But it's so funny though. Y'all know what I'm saying. But anyways, without further ado, let's just go to the charts and let me just show you what I'm saying. Okay, you see, it's very, very clear. Now, swing traders like the 200 or the 180, because that's counting 200 candles back. So that can give you a real sense of a trend if price is above it of a 200 simple moving average. But I'm not a swing trader, neither are you, I don't think. But so we use the 50, and the 50 will give us a good day trade setup. All right, in and out before the day is up. So look at the candles. Boom, boom. It's all of these pullbacks are buy opportunities, and then it breaks through, and it's pretty much breaking through. Sometimes when it breaks through, every once in a while, you will get faked out. Nothing is 100% in a market based on probability, right? So don't never come to somebody looking for a foolproof strategy. It's not going to happen. What's going to help you is risk management and money management is what's going to help you. But the 50 moving average definitely helps though, for like 75-80% of the time. So look at it. Just look at it. All right. This is the hour chart, and we would enter on a 15-minute chart. So it's plenty of money to be made just based off of price above or below the 50. It's clear. When price is above it, we're looking for buys. When price is below it, we're looking for sales. Now let's bring on the 20. That's going to be in white. All right. You're going to get way more crossovers. Way more. It's going to be cutting through the price a little bit more because it's based on, you know, well, not it's based on, but it's more like an entry. So if you could combine the 20 with the 50, and that could start turning into where you would be entering at. That's a possibility there. But I think that to avoid fake outs and different things, it's been proven. I have done this many years of just doing a 50 simple moving average, and it works. It works more than counting on this 20 moving average. Hopefully that helped you. That's my you know, mindset on it and how I think about it. You know, trying to answer you real quick, but I go over these strategies in the Trend Trading Academy. So if you ever want to really pick my brain and really want to, you know, me to do a training of a, you know, request from you in the academy, and you know, we got videos on the best moving averages and the entries for them. You know, just join the team if you choose to. Loads of information on how to use these moving averages. All right, for swing traders, day traders, everything. So shout out to you, Crystal. Thank you for supporting. So the next subscriber says, what is his name? Paulus. He says, cons and pros of spreads, floating and fixed spread. Which one are you going to recommend according to your experience as a trader? All right. Shout out to you, Paulus from Africa. Shout out to you. So you already know it's gonna be based on, you know, how you trade. If they offer you a fixed spread, then the commissions is gonna be higher. You know, I don't want no large commission fee because I'm trading $200 lot sizes, and you know, probably would trade higher as my account continues to grow, and I don't want to be having no outrageous commission fee. For those who don't know, fixed spread is a spread that's going to stay the same regardless. You're going to get a 1 pip spread, maybe a 0 pip spread, 2 pip spread, whatever. It will not change. And scalpers love that because you can quickly go on and get past that one little spread, whatever they have, and get right to profit. But you got to pay that fee. The brokers know what they're doing. They're going to get their money regardless. So if it was up to me, I would get a broker that has a fixed spread, okay, that don't change, and a low commission fee. You know, I guess the average like 7% that most brokers would charge. So that's what I would do in a perfect world. They're not going to do that though, because they have to get their money on the back end. So it's up to you. You know, swing traders don't care either way, as long as the floating spread is not outrageous. For me as a scalper and day trader, I'm not trading anything over 3.0 spread. Okay, a spread of 3. I'm not trading anything over that. It just takes too long to get into profit. The spread keep bouncing around, opening up, closing it up, opening up. So, you know, I'm trading GBP USD with like a 0.2 or 0.8 spread, one spread, like a point, like not even one. And sometimes, you know, most of the time GBP USD during London session is like one spread. I'm trading that a lot. I'm trading GBP all like at a 2.5, and that can range between, you know, 1.9, 1.8, 2.5 on the higher end. GBP CAD I'm trading as well. That spread is pretty decent with my broker. So currently I'm using a floating spread with a 0.7 commission fee. All right, so it's not bad. I get into profit every day, no problem. I hope I answered your question. You know, comment below if I missed something, but I think I pretty much answered it. All right, so our next subscriber is Chris. Shout out to you, Chris. I appreciate you for subscribing and supporting the channel. and he said, "Hey Jay, you said you only trade 4 days a week, Monday through Thursday, and why? Thanks for your time." All right, bro, I'm gonna lace you up real quick. Here's the thing. Sundays, a lot of beginner traders are eager to jump into the market, right? Well, who moves the market? All right, central banks, a lot of the banks, and then the hedge funds and different things like that, right? So if the banks move the market, most banks aren't open on Sunday. You see what I'm saying? So it's a lot of liquidity that's left over from the previous week that you see on Sunday, and it just continues to move before the market shut down. Sometimes it would gap, and you know, it's just a way that people get trapped in the market, faked out. And plus, I like to enjoy my weekends. I like to, you know, fully enjoy from Friday to Sunday, every bit of it, and then I focus on the markets Monday through Thursday. Now, why not Friday? Friday, I don't trade because you can get trapped in the market on Friday. A lot of the moves happen Tuesday, Wednesday, Thursday, right? So if that's the case, Fridays, it could slow down around New York time. And if you do trade on Friday, then you probably should stop trading around 8 o'clock. From 1 a.m. to Eastern, 1 a.m. Eastern to like 8 a.m. Eastern. And then you should probably be done because the market is probably going to slow down. You know, it could pick up, but most of the time, you know, I don't want you guys to get, you know, into some drawdown from a bad entry and then the market closes on you and you can't get a break even, or you got to take an L. I want you guys to avoid that situation altogether. So just don't even trade on Fridays, or trade 1 a.m. Eastern to 8 a.m. Eastern and just be done with it. All right, so our next subscriber, shout out to Rafudin. I think I pronounced your name right or close to it. Sorry, bro, if I messed it up. But he said, I have watched quite a few videos of yours, and you have mentioned that you are a day trader and you do not trade when there's high impact news. My question is, which website or app do you use to get your news for Forex? All right, so I'm gonna put it on the screen right here. I use my FX book. Sometimes I use FX Street. Those are very, very, very good apps and websites to use for like seeing what news is about to happen for the day and the week. All right, so you can already see what your week is gonna look like. The reason why I don't trade news because I'm a scalper and mostly just a day trader. I'm in and out, and like within 4 hours, I'm pretty much done for the day. All right, 1 or 2 trades. So if that's the case, what if I'm in a trade and high impact news come? You know, that thing will spike the market on like a 15, 30 minute, 1 hour chart, like hard. Like that could be like a 50 pip unnecessary drawdown. And then it still comes back my way. But I had to suffer that drawdown because I'm on a lower time frames getting affected by it. Now, if I was a swing trader, I probably wouldn't care because news is baked into price. News is baked into price. So news normally just pushes price where it's gonna go anyway. You see the setup, you see the price is on like the fifth Elliott wave, and now it's about to make a correction or something like that. Like news usually just pushes it where it's about to go anyway. So if I was a swing trader, those little spikes won't affect me as much. But because I'm a day trader and sometimes I'll be scalping, those spikes do affect me. So when I'm on my FX book, if I see red folders, I don't trade. It's a no trade day. Go to sleep. Enjoy your rest. If I see like 5 medium folders, I consider that as a high impact. So I'm still not going to trade that. But I may see what the market look like after the news passes. All right. And if I see low impact news, then that's okay. That's all good. I trade. It's a normal day. So that's how I look at news. I'm not a fundamental trader. I'm a technical trader. I've been doing very well with it. And you know, I'm not opposed to learning fundamentals. That's just I spent 4 years. I spent 4.5 years mastering technical analysis. I may spend another 4 learning the fundamental side to it, just so I can give you guys more value. But that's my answer to your question, my man. Hope I laced you up. Vimy, thank you for subscribing, being a follower, supporting the movement. All right. He said, where to Martin trend meter. So he's saying, where is it? It's out of stock. So as you guys may know, that I have been supporting the Martin indicators, the Martin stochastic, the trend meter. I created a strategy based around it. Well, here's the thing, guys. They're not on TradingView anymore, but I already talked about that in my last video. The reason why I'm not going to continue with the trade indicators people, or the Martin indicator people, because I'm still getting a lot of emails saying that they have not been refunded. Now, granted, it may be some liars involved that's telling me that, but I know it's some people that are not lying. I know that, and they have not been refunded and they don't have access. Basically, they fell through the cracks. All right. And as a business owner myself, I do kind of understand, but you know what? It was some people that I had to refund when they joined the academy, and a whole bunch of people got COVID-19 and they couldn't utilize my services. So in that situation, I refunded the people. All right, now that's over now, but I manually had to do that, and I made sure that if they had a valid case for being refunded, I made sure that I took the time and refunded the people. All right, because that's the right thing to do. Now, I don't know why these people aren't being refunded, but it's a few of them, and I had a meeting. If you want to see the interview or the meeting that I had with Trade Indicators, then click the link above. It's up there, okay? But I told them that I really, really, really need everybody refunded that has a valid case. I need everybody refunded. I even try to message them names of people that needed to be refunded. Some were, some weren't. And because I'm a man of integrity, guys, but I can no longer promote it though. I cannot promote it because they did not refund everybody. And I know it's hard. I know it's time consuming, but this is real money. You guys are real people, and if you can't access the indicators, you guys have to be refunded. So I just had to make a decision, probably an unpopular decision, but I just had to separate from that situation. I wanted everybody refunded, and that just wasn't the case, guys. So, they're not on TradingView anymore. I'm not sure when it'll be in stock, but because of that, we will reconstruct the 50 moving average strategy, and I will remake a new video talking about the 50 moving average strategy and how we need to use it with different indicators, if you will, or just a different approach, because those indicators that I talked about on that video are not valid anymore. So or they're not for sale. So that's my update to that. I hope you guys understood what I was saying. I guess you can comment below it, ask more questions, but that's just where I stand with that now. So, all right, guys. So don't forget, right now this is summertime and we are in consolidation for the most part. And don't get caught up in consolidation. I want you guys to be profitable. So you need to go click that video right over there, because it's going to show you the pivot point strategy. And it's probably going to save you from blowing your account or losing a lot of money during the consolidation of the summertime. It's perfect for it. So go ahead and watch it. Don't forget to like this video, comment, and subscribe for your boy. And let's make this money, baby. Peace.
All right.